the tracking, but so just forward tracking from here. I'm looking for anything to break back below 601 to confirm that we should continue. Currently, all that I can do is keep applying this um bullish breakout channel. This is the one that we use on all of these iterations. Once they break out, you find the higher low, you apply this to the channel, and you just forward track from there. So if trend continues, you're looking for a break of 613 and then back up into this area or test GANs 625, 620 approximately. But again, I'm just kind of watching at this point. I want to see if one way or the other confirms. Macro position still never changes for me. We're still just looking for this to be M and the top, and then a more macro descending broadening wedge to occur. That's it. Macro position of this, I have it all posted. This is a top iteration I use January 2022. So we go all the way back to here. Top of January 2022. This is blow off top comparable landmarks, just like our macro position bubble pop 2000. Again, if you want to know more about the macro position of this, it's posted all over the place. So what I'm looking for coming out of SPY, this was our blow off top. This was the area I was looking for. It's just an M with the higher right side confirmed by breaking below the support that it once had. So once you confirm that, instead of breaking out bullish out of every one of these, like they have been, all of these previous descending broadening wedges, they break out bullish. That's why we have the bullish bars pattern. This is the one that we use all the time to figure out, once you create a higher low off of this, what this will look like tracking forward. So if SPY breaks out of this bullish, this is what it's going to look like. Otherwise, we are confirmed top. And this is what that side by side looks like. And actually, I probably have this better posted in its channel. Because I've done an incredible job tracking through this top, especially the past couple weeks. We've been utilizing Orb. Orb is opening range breakouts. So if you want to learn more about that, it's all in the SPY channel. So this is that top. Here's the side by side here. This is the middle of your M, finding that higher right side, and then confirmed with all the volatility to the downside here. A slight consolidation once you break below that red box. That is green box. That is the landmark that I'm currently trying to confirm. Obviously, when you're looking at our current price action, we didn't really get much of this consolidation period before falling and finding a new low. That low price target for me is 524 to 544. I conservatively wanted 544. If we reject here and continue to the downside, it's going to look more like this, where you end up at 524. So if you reject some of these levels here without really breaking above, which we kind of already am, I'm going to assume that with confirmation, you're going to break down and come back and find this 524. Super macro equation date for SPY using COVID low and January 22nd, 2022 high. That means that you're using intertrend dates to try to forecast another peak. So this was from a couple weeks ago before we started our big moves down. COVID low, January 2022 high, forecasted us 214, 2025, and April 28th, 2025. So that's what, here's the 14th. It was the absolute fucking high. The next day we produced the highs and then broke down from it. So incredible, incredible, incredible macro equation that is so far playing out really good. I don't know what April 28th is going to be, but tracking into it, we know that it's going to be a volatility date. That's what I do know. SPY, super quick. SPY, this is a really old chart, not really old. January 2022. This is when I was starting to track for the pullback I was looking for. I was comparing to the bubble pop of .com bubble 2000. 1999 going into 2000. So this was the pullback. I was looking for around 350. This was January 19th, 2022. This was after throwing some levels up. Again, wanted to see that 350 mark. If it bounced at 390, we were going to continue from there. This was May 2022. This was posted in the Discord at June 1st, 2022. I was showing, and this is when I was first starting to work on the equation. And so one of the macros that I pulled was COVID low and the January 2022 high to forecast what the high point would be, since this is intertrend on a macro perspective, what the high point would be for what I was looking for. Price target at that time was 5,500 to 6,000 for SPX. So that's what I was looking for. We wanted to see 36 to 3,500 for this low and then continue off the other side. This is that area zoomed in. So you can see, was looking for that 3,600, pull off the other side, 6,000 price target, 2025. This is what played out. So before, after. Price target 5,500 to 6,000. I'd say we nailed that. Here is that equation date model. So again, pulling the low of COVID and the highest point of January 2022 gave us this 214 to 428 equation date. So from 214, this is the macro perspective to that bubble pop I was talking about, 1999 to 2000. The idea here is this is all leg A, and being leg A, it's a fractal, so it's self-similar. The landmark that I'm looking for is this area where we do not touch, which is the red dot, the area that we do not touch. And then this is the landmark following that I call blow off top. That means that if you bounce a ball and it's going, and at some point it just, or not a bouncing ball, but that's the visual. At some point you gain enough momentum that you're not coming back to test the trend again, and instead you're just taking off from a higher point. So this is what I would consider blow off top, like COVID. COVID pulled back the trend. Now on a larger perspective, from a macro perspective, it was just a mid landmark. And what it did is it then sent us into the more macro bubble pop. That's what 2000 is. That's what 08 is. That's what, even on a, just as a fractal perspective, that's what January 22nd or January 2022 was. And that's why I use January 2022 for my side-by-sides. But here's the idea. We were looking for 55 to 6,000, nailed it. So here is zooming in on that February. So on the left side here, I don't know what side it is for you. This chart is January 2022 peak, which is what I use for some of my micro tracking in the landmarks. And on the opposite side is our current tracking. And so after we topped, February 14th was the day before we peaked at that 613 mark for SPY. And then the tracking, I was looking for a lower high and for the tracking to continue down into 524. So the price target first was to break 586. That's where we got this, 586. Forward tracked us into then what I was looking for, breaking this red box. Breaking this red box here, which in this case it was below 575. The price target was 565 for this whole move, and then the forward track from there. There's 565. So we then got 565. I wanted to start tracking this green box. This green box is just a slight consolidation period, anywhere within this range before then continuing down to that 524 price target. And that's what we did. We got into this range, played our consolidation back and forth. We were able to track that very well. Now I wanted to see a break of price target 544 to then further into 524. Again, for the side-by-side, completed the green, looking for this pullback into this red box. Here we are now. This is most recent. So we've now broken all the previous levels. We know from SPY's just previous pattern, and any one of the previous patterns, there's tons of examples, a descending broadening wedge finishes with that lower V, and then you take off from the other side of that, where you either make a more macro lower high, which would be second stage distribution, or you break out bullish, and we use the bullish tracking to break out of that descending broadening wedge. But in any sense, you need that lower V. So breaking the 550s is no longer our lowest V, and we need to continue down here into the 524. There is a one-day 618 moving average at 507. And if you're doing it side by side with the previous drop, this was a 10.5% drop from February until this was March when we finally found 550. So if you were to apply that again from peak to bottom, it's around 518. So from 507, 518, or my price target 524, that's where I'm expecting this red box. Coming off of that red box, we're then going to go bullish, and you're going to look to stay below the red box here. So really anything that stays below 576, I do have a little bit of leeway. I'll accept 586 and maybe even 591. There's some good levels up there, but in any sense, I'm bullish until we get to that point. And really, it's to the date. Um, the the second date here of 428 on this super macro equation. I want to see, and this is just kind of theory at this time, I want to see what this whole iteration calls for. So that's what this screenshot shows. This is the whole iteration from equation date, the first one, February 14th, and until the ending of April 28th. So I'm going to be watching here to see what is happening around April 28th. It's going to be something. We might still be down at this 524. If we are at the low points, I know that following April and going into the summer, it's going to be an incredible bull run, calls every day, you know, that kind of thing. All the blue chips are going to go back up. But let me show now. In the last video, I was talking about SPY, and we walked through this whole downtrend. The price target was 507, one-day 618 moving average. Ended up going much, much lower, 480 support, which is totally fine still. We're still tracking now for the uptrend. So after we found this bounce here, looking for the uptrend, got the big bounce uptrend volatility. Now I was looking for this white circle, the pullback. There's this whole section here that we got back to 509. That was the pullback. Now we're tracking back into the uptrend to find lower high. That's the following landmark. So currently still uptrending, looking for that lower high. 565 to 575 is the price target for that lower high. This is showing the super macro equation date that I pulled. This was in 2022. Again, using COVID lows and January 2022 high point, forecasted us to February 14th, 2025 to April 28th, 2025. And I mentioned in the last video that I'm more interested in what the price action is between those dates rather than trying to be exact with where the landmarks are. And I was thinking that this whole iteration was going to play out what SPY's fractal is, and it's just a descending broadening wedge. And so this is it updated. This is what we now have. We are now coming up into today is the 29th. So we're coming up at the ending of this entire range of the answer. That's what's shown here. This is February 14th, so it is the beginning of this pattern. Descending broadening wedge the whole way through, and now here we are at the end of the pattern at your inflection point. The inflection point I posted, let me pull it real quick. So there's two patterns used in this screenshot. You have the more macro bubble pop, which is what I track out of 2022 high, or also 1999 to 2000 bubble pop. It would track more like this yellow bars pattern. If it's a bullish breakout, then you'll get something more like our bullish breakout pattern. This is the one that you can apply to any one of these descending broadening wedges that we've had in the past. You can apply this as that exact point. The two landmarks that you're looking for on the pink is this consolidation before breakout and this pullback up here. Everything else is kind of just real, small up and downs, but these two consolidation points will play out every time on the bullish. So if this breaks out bullish from this consolidation point, then the next landmark you'll be looking for is this one here. If we confirm lower high, which would be anything falling back below 544, or like that 524 would be absolute confirmation. You're going to come down and you're going to find these lower numbers that we have, for this tracking. So that's SPY. If you're going to break bullish, if you're going to break bearish, this is what it looks like. This is what I'm more interested in, is the completed iteration within that equation date answer, which is super cool. I just think that's a really cool thing to see.